Chantal Marx, as I've just mentioned, who's the head of external research and content at FNB Wealth and Investments, joins me now to unpack those markets. Chantal, over the last few days, we've seen some record movements on the all share. A marginal close in the green today. Do you think that markets were taking a little bit of a breather after all of the movements that we saw earlier in the week?
Well, the JSE actually is outperformed the global markets today with a 0.01% up close, or a flat close as we'd call it fairly. But if we look at US markets are trading down today. You also have a mixed picture coming through in Europe, and Asian markets were negative today as well. So the JSE actually doing quite well to hold up. Really a function of the financial stocks doing a little bit better. The financial sector really didn't participate in the record numbers that we saw earlier this week. That sector has been a little bit soft, so perhaps playing a bit of catch up there. And then also pretty decent support from resources, and Richemont continuing its march upward, even though everyone is saying it looks super expensive, still closing up the day 0.5%. So really actually quite decent support for the JSE amid softer markets globally.
Right, let's get into some company statements that were out today. Woolworths and Spar Group, Chantal, a little bit of a similar story there in terms of disruptions to the business having an impact on revenue created for the businesses.
Yeah, so we saw both of these stocks come under pressure today. I think they were the worst performing two stocks in the top 100. Woolworths said that they really struggled in Australia during this period because of Australian lockdowns. In response to COVID-19. And in South Africa, you actually saw a pretty decent performance coming through from their food business, but some of their businesses interrupted by civil unrest in July in KwaZulu-Natal and in Gauteng. So it was a difficult half for them. I think the market's probably overreacting a little bit. And similarly with Spar, we saw a bit of a disruption for Spar as well, of course, headquartered in KwaZulu-Natal during this period. Its core grocery business came under pressure. It did very well in Switzerland and very well in Ireland, and they recently acquired a business in Poland which did very well from a top line or from a revenue or sales perspective, but they're still trying to turn that business around, so the financials there still under a little bit of pressure. I think I would be more worried about Spar right now than I would be about Woolworths, just because its core business is being impacted, in this case the food business.
Right. Another company, Tongaat, announcing a capital raise, Chantal, and then the stock tanking around 20% on that announcement. I mean, obviously there's a lot of unhappiness when it comes to this particular stock, but I figure given the times that Tongaat has had, they don't have much options.
Yeah, the big issue with Tongaat at the moment is that it still has very high debt levels, and it's finding it very difficult to clear it. Its sugar business is super cyclical, which makes it very difficult to pay down a huge debt pile. And its property business has come under pressure because it's finding it quite difficult to realize value out of the properties it owns in that Umhlanga area because of a lack of demand for property in KwaZulu-Natal following the civil unrest in July. So again, that comes into the fore here. But they really need to bring down their debt. And I think we shouldn't be too hard on Tongaat Hewlett. It's probably the right thing to do. And one must remember that stocks that are now very much loved by retail investors and regarded as pretty intelligent punts over the last 6 to 12 months, like Aveng and PPC, did exactly the same thing a couple of years ago. So perhaps this is the thing that Tongaat needs to do in order to reposition itself for growth going forward.